Good morning, good afternoon, good evening, traders from across the globe. Welcome to Short-Term Trading Live with Oscar. All right, traders, boy, oh boy, Jan's starting off to be just like we thought it was going to be. And that's a market that's going to start heading right back down like it was before the holiday season. This video is for trading Thursday, January 8th, 2009. And traders, the Omni, the last video I left you with, the Omni, I showed you something that looked like this. I said we had this ascending triangle or wedge formation. The market was inside of it. It just broke out for a day. And I illustrated to you that it would go up for a day, fail, as I called it, a failure pattern, and we'd go down, and that's what usually happens in a bear market when you have an ascending wedge or angle. So I was brave enough to get in front of this camera and say, traders, forget it, forget the upside. Omni flipped from green on Monday to red on Tuesday. It stayed red for Wednesday. Omni called for 897.5 to happen on Wednesday when we were trading over 920. And you know what happened, traders? In fact, we were trading about 930. We went to 898 today. 898.5. We went right down there today. So Omni nailed the direction and basically where to get out perfectly. Now, Omni wanted to get in at around 934. It only got to 931, 931.5, so we never actually got in. But I'm live in New York City this week, and I was out at appointments today, so I couldn't really help the Omniacs get in anywhere. But the Omni call was good. We also had a weak call, which went bad, loser. Pew! The weak call was really bad, traders. But I will say this, I had a very good technical reason why we bought the wheat. And I have some charts I'd like to show you. The chart, first chart right off the bat, we'll get the ugly out of the way. I'm going to show you the wheat and why we got long. And of course, it didn't work, and we can't get every trade right, traders. As you know, losing is an integral part of trading. You cannot have winners without losers. So, hey, losses will come. But we did have a good technical setup for the wheat. It didn't work. On to the next trade. The S&P trade gave you the direction, gave you a short in the 30s if you took it or anywhere near it, and told you where to get out under 900. So 1 out of 2 for Wednesday. Monday's trade was great. Tuesday's trade was great. Wednesday's trade was right on, but the wheat gave us the old kidney punch. All right, enough of that. So what I'm about to do is I'm about to show you a few charts, traders. That ascending wedge, what I did was I put up a chart a week ago, and I drew the ascending wedge, and it had no lines in it at all. It didn't fill out yet. And I illustrated, I actually drew one on the chart, a fictitious one, and I said, this is what will happen. It'll go up and come back down. We all sat for the last few days, traders, and watched the chart develop almost picture perfect, exactly like we projected, which is almost insane. But traders, it is pure technical analysis that helps me come up with these trades and these recommendations, and it's right there in the charts at all times. So let me take you to the charts now and show you what I'm talking about. I think you'll find them interesting. And I think this lesson, because it's been 3 videos in a row that we've been mired in this ascending wedge, and I showed you traders how to handle it, what should happen, and what to do every time you see one. Now you're going to see the end result, and I believe that this lesson will hit home, traders. I'm trying to make it hit home. That's why I do them over and over, as the markets are within some form of formation. I do that formation over and over in my videos until we pop out of the formation. Then, of course, whatever starts to develop next, we begin to trade that. We are day traders, right? So this ascending angle could turn out to end up being a head and shoulders. Who knows what it will morph into? But that's the beauty of being a trader that gets out at the end of each day. Whatever plan we have on the board, whatever plan we have to trade the next day, if that plan develops into something else, we're out of the market at the end of each night, and in the morning we're ready to get back in and follow the markets. Because traders, I've told you this a million times, The markets are always right. The charts are always right. It's us humans. It's our plight to call it correctly. The chart is always right. You can't say, I know what's going to happen. The chart's wrong. The chart is always right. You got to lend an ear and listen to what the charts say. And traders, you'll see what I mean right now. Let's go to the charts. Okay, traders, what you're looking at is today's disaster. This is the wheat daily March bar chart. Now here's why, one of the reasons why Omni chose to get long wheat on Wednesday, which of course didn't work, but here's the reasoning. This is Omni's proprietary moving average, right? You see we got above it on Monday, on Tuesday I should say. We got above it on Tuesday, and look what happens almost every time you get above that Omni average. You get at least 2 major blast-off days. This one went up for a long time. This one had 2 nice major blast-off days. You're almost never near the Omni proprietary in wheat. So when you get above it, usually you have a nice run up. So Omni pegs it because it sees it getting above the Omni proprietary average, and it always buys when something gets above that average. Plus, if you look at your indicators in wheat, they were all still pointing up on Monday night for Tuesday's analysis and Tuesday for Wednesday. So if technical indicators are pointing higher and you get above an Omni average and the Omni says to buy it, hey, I don't argue with that. So there was sound analysis behind the wheat trade, but traders, it went up, turned around and failed, and believe it or not, put in one of my patented mirror image formations, only it's 2 parts of a 3-part formation. Part 1 and Part 2 are in place. After trading on Thursday, we will see the mirror image, whether it's bullish or bearish, and I will certainly keep you OmniX informed on whether it's a bull or bear move coming from the Omni average. Now, if we hold above the average, basically you should get a rally. If we fail to hold above the average tomorrow on Thursday and get below it, and that's at about 600 price of March wheat, if we get below it, it will look like a seller's mirror image, and probably we'll find a short trade. So let's keep our eyes on wheat. That takes care of the reason behind the wheat trade. Now, trade is very important to watch this next chart coming your way and the one behind it, because it seriously depicts exactly what happened in the market technically and the technical reason why we went down. Let's look at the next chart, traders. Okay, traders, what you're looking at now is the daily S&P bar chart for March. Daily S&P bar. Traders, here's where it gets really interesting. I drew this illustration before any of the stuff inside the circle existed. And I said, traders, right before the holiday, I illustrated this very same failure pattern to you, which I did do in a video, and it did fail. So I drew it again, and I said, we're heading for the same thing here, and this is what should happen. And in fact, that failure pattern developed almost picture perfect when compared to our projection, traders. Here was our projection, and look at what the end result was. It happened just as it should have technically. In the art of technical analysis, traders, history has a tendency of repeating itself. So here you are, I draw what should happen if I'm right. Here's how you should handle coming out of the wedge, and look what happened, traders. It went up, stayed up for a day, turned around and went almost to the bottom of that wedge formation in one trading session. Traders, keep this lesson in your toolbox. It is a very, very smart way to trade a bear market. Now let's go look at the leader, traders. The leader, in my opinion, is the Dow Jones Transportation Average. Let's go look at what that pattern looks like right now. All right, traders, what we're looking at now is the Dow Jones Transportation Average daily bar chart, right? You know that formation that we were talking about? Well, look at the exact same thing happened with the leader. It went out above the formation, put in the false breakout, and boom, right back down into the wedge formation. That's what we were expecting. The leader thinks that's what's going on. The follower, the S&P, went right down. So far, traders, very technically oriented trading we are seeing here in 2009. Keep this in mind. We will get down to the bottom and test it once again. It tested it here here, here, and here. The likelihood is it will break down through it, and we will end up continuing in our bear market. Again, traders, we are day traders. That doesn't have to develop tomorrow. It could be something completely different, but we take these trades one day at a time. Now, let's go look at the technical indicators behind the leader and see what you think about them. Okay, traders, what we're looking at now is the slow stochastic indicator on the Dow Jones Transportation Average Daily Bar Chart. Traders, clearly we went to the overbought area, and the yellow crossed the red, and it is pointing down. So you have a technical indicator telling you the market's tired of going up, it wants to go down. You have a wedge formation, which had a false breakout, telling you the market wants to go down. I think that's pretty bearish if you ask me. So now you see slow stochastics, right? Let's go look at a couple of more indicators here. Okay, traders, next chart on the block here is the Dow Jones Transportation Average. Again, the leader of the indices. It is the CCI, or Commodity Channel Index indicator. Again, another one that clearly went into the overbought territory, turned around, came down, and now the blue average crosses with the red average right here. And that is another bearish signal. Bearish formations, bearish indicators, a bearish market, and bearish news coming out this week. If you ask me, that's pretty much a bearish trade in my opinion. Let's look at more indicators here, traders. Okay, traders, next on the block, just to prove this point, third indicator, RSI, Relative Strength Index on the Dow Jones Transportation Average Daily Bar, clearly pointing towards the downside, clearly overbought when it started to point towards the downside. Another indicator pointing towards the market moving lower. You see the picture here, traders? It's starting to add up, isn't it? Let's take a look at one more indicator, one of my favorites. Okay, traders, last indicator I will show you this evening is the Dow Jones Transportation Average Daily Bar, WADX, Average Directional Movement Indicator. This indicator, when the green directional movement average is pointing down and the red directional movement average is pointing up, that is a sell signal. When green points down and red points up, it is a sell signal. You see that right here. Another indicator giving a clear sell signal in the Dow Jones Transportation Average. These indicators look very much the same if you overlay them on your Emini S&P chart. And I think we're heading down, traders. You've seen the technical analysis. Please do your own homework. Make sure you compare your notes to mine before you accept any trades. Good luck trading, traders. So, you see the charts, traders? Look, traders, no joke. About 10 days before the holiday season that just passed, Christmas, New Year's came in, we had that very same type of trade to trade out of. We had a wedge pattern. We needed to trade out of the pattern. I drew one of those fictitious wedges and said, this is what should happen. And the market did exactly that. It went up and broke down. And I said, you see that, traders? Great lesson. Well, luckily, right after the holiday, we were able to see the same thing again. And what happened, traders? Like you just seen in those charts, the same result. That's what happens when you have a wedge formation in a bearish market. It almost always means false breakout on the upside and a drop back down. Maybe we'll revisit that in a few minutes after I tell you about tomorrow's trade. Traders, keep this lesson in mind. Put it in your toolbox, in your arsenal of tools that help you trade these markets properly, because trading out of a wedge, if you get it right, can be quite rewarding. All right, traders, for Thursday again, Jan 8, 2009, we got a red Omni once again, baby. Go red Omni, yeah. All right. You know I don't like buying in a bear market, so when the Omni comes out green, I'm like, I'm biting my nails, you know what I mean? I hate buying in a bear market. So right now, I like these red Omnis. All right, so for tomorrow, traders, Omni says to sell the March Emini S&P in the mid to high teens, the 19s. Right now, we're trading around 905, 907. If it bolts up, gets above 915, somewhere between 915 and 920, I'm going short up there on the action. You might want it as well. Do your homework on that and see what you think. All right, so Omni says to sell it in the mid to high teens. Expect the market to go a little into that area, maybe a little higher. Place your stops in a sensible place. As I always tell you, traders, a stop is your best friend. Always place a stop and place them first. All right, if you need to know exactly where to place stops, you come on down to the site, and I will tell you exactly where our stops are because I put them out on the Omni page the night before for the next day's trading. You traders who are members, you know what I'm talking about, so go look at where the stop belongs. All right. Omni says sell in the mid to high 19s. The profit objective is the mid to low 870s, traders, with some support on the way down, expected in the 880s, the high 880s. So as you cross between 890 and 887, I think there's support down there. Once you break through that, 875 looks like the way this market wants to go. Now, Omni's analysis for S&P for the last 3 days, traders, has been really, really on. The S&P and the Omni have just been married to one another. So pay attention to the Omni, pay attention to the recommendation, and do your own homework. Make sure you agree with this trade. Traders, never take anyone's recommendation ever without doing your own homework. Two things happen there. One, you can't blame anyone else for your own mistakes, which is the only way to learn, to actually realize you made a mistake. So if you took anyone's recommendation and you accepted it and did the trade, no matter win, lose, or draw, it is your fault, right? So always accept blame for your own good or bad trades. But the two things that happen is, A, you learn, absolutely learn what to do by doing the homework, and B, you just didn't accept someone's trade without knowing blindly, so you got no one to blame. So those two things, 1 and 2, A and B, whatever you want to say there, they will help you. Do your homework. If you are going to take someone's trade, find out if you can figure out on the chart why that person thinks it's going down or up, and then you'll feel much better about your trade. All right, traders, so don't forget, we're going to sell it in the teens, the 19, 9, 19, and somewhere up there. Omni's profit objective is the 875 area, with support expected as you cross over the 890s. All right, traders, let's see what's going to happen. Give me a call anytime, day or night. By the way, if you don't know what you're doing, you'll be able to find one of us here that can help you at all times. And number is 702-629-4755. You know what? I am not done yet. I want to make sure that you got this right. This lesson worked so well before and after the holiday that I need to draw it on the board one more time, traders. And I've told you this. Repetitive teaching is a great way for students to remember what they've seen last and what to do when it comes next. So let me repeat this one more time for you. All right, here is what we have right now. We have a bear market, right? Market's heading down, 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 down. Then it goes up a little and then back down, and it goes up a little and back down. And somehow you end up with some sort of a wedge formation, right? So the chart comes to a spot where you have one line moving up, the other line's moving across. I don't like that illustration. Let me just do it again. I want you to see it clearly. You have one line moving this way, you have another line moving up, and you have the market trading within this line. What will happen almost all the time if you are in a bearish market, you will break out, you'll have a day up, another day to make a new high above that, and usually on the third day out of that top line, it goes back into it, and that is your signal that it is a false breakout. This is exactly what happened on those charts, traders. This is what happens in a bear market. Of course, if we were in a bull market, that would have been a breakout and you would have wanted to get long. In a bear market, just about any formation that gets created until the bear is done going down simply means continuation to the downside, which means don't fall in love with the upside no matter what you see. And I say that in every video. And traders, I used to say don't fall in love with the downside when we were bullish. So one day I'll be able to say that again. But for now that the market is bearish, don't fall in love with the upside. All right, traders, please come on down to the site. It's www.livewithoscar.com. Grab a free membership. Jump into chat rooms. Allow us to teach you the proper mentality behind trading. Because, look, anybody can come up with a good technical plan. how to implement that plan and the proper mentality you need to get through the trading day is more important than what way you're going to trade. Believe me, the mental game behind trading takes years to develop properly. But with a site like ours and a teacher like me, you will certainly learn a lot sooner than if you're beating the ground on your own. Traders, how many people in this world get to literally look over the shoulder of a 27-year experienced trader who shares his tips and secrets willingly every day? That is what you get when you're here at the Omni Trading Academy, and we do not hold back, traders. So make sure you come on down, further your education, become a better trader, and learn the proper mentality behind trading. All right, traders, I think I'm done for now. You know, we got rate cuts happening in Europe this week. Probably tomorrow you're going to hear about that. I would imagine there'll be a big disturbance in currencies. I'm going to stay away from them until after the rate decisions are over. We will stick with the S&P for now. We are in a bearish market, in bear mode. Go short on the rallies and see what we get. All right, traders, thank you so much for watching my videos. Hey, one last thing I'll say to you. If you are on my YouTube spot, it's www.youtube.com/futures analysts. To any of you who don't know where you found this video, if you're at the YouTube spot, simply subscribe to my videos and you will be notified by YouTube whenever we put out a new video. All right, traders, thank you so much for watching. I hope these videos are helping you. And remember, keep your emotions out of trading. One of the best ways I can help you with that is to tell you to say this to yourselves every morning, every afternoon, every evening. And you know what that is? Stops are in. Emotions are out.
Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided. That being said, I am a 24-year seasoned trader on and off the floors. This is how I've made my living for many, many years. Good luck trading.